Wall Street saw share prices tumble on Tuesday as a sharp sell-off in semiconductor stocks sent the Nasdaq and S&P 500 to their lowest levels in more than a week. Investors grew increasingly concerned about mounting debt-funded AI spending and the prospect of a more hawkish Federal Reserve. Our Seung-jae has more.
U.S. stocks closed sharply lower on Tuesday, with the Nasdaq and S&P 500 falling to their lowest levels in more than a week as a sell-off in semiconductor shares rattled investors. By the closing bell, the Dow Jones Industrial Average slipped 0.09%, while the S&P 500 fell 1.44%, and the Nasdaq dropped 2.21%. The Philadelphia Semiconductor Index plunged nearly 8%, while the S&P 500's technology sector dropped 3.7%. Major chip and AI-related stocks led the decline. Nvidia fell more than 4%, Alphabet lost 1%, and chip makers including Intel, Marvell Technology, and AMD dropped between nearly 6 and 9%. Investors are increasingly questioning the sustainability of massive AI-related spending, particularly as major technology companies continue to raise debt to finance data centers and infrastructure projects. SpaceX, which recently entered the public market, has also tapped the bond market to raise capital. Its shares managed to rise 1% after 3 straight days of losses. Meanwhile, memory chip makers Micron Technology and SanDisk, two of the market's strongest performers this year, each plunged about 13%. Investors are closely watching Micron's earnings report due Wednesday for clues about the outlook for memory chips and the broader AI sector following this year's powerful rally. South Korean stocks tumbled nearly 10% on Tuesday as foreign investors sold major technology shares. Samsung Electronics and SK Hynix both fell over 12%, reflecting growing concerns over the semiconductor sector and the future pace of AI-driven growth. Seung-jae, Arirang News.